Melissa, thank you very much. We are joined by Atlanta Fed President Raphael Bostic, and we're very glad to have him here to kind of get a feel for where policy is going. Raphael, good morning to you.
Good morning, Steve. How are you doing?
I'm doing well. I wonder if we might start off with your overall view of the economy. When we look at both sides of the Fed's mandate, inflation and employment, do you feel like we've made the substantial further progress you and other Fed members are looking for to begin to think about reducing asset purchases?
Well, I think we've actually gone quite a long way toward making that progress. If you look at the inflation side, we're above our 2% target over really a long period of time. The 5-year average for PCE inflation core is over 2% right now. So I think that stands as progress. And then on the employment side, we've made a lot of progress, and I think we're on the road to that. A lot will depend on what happens in the next couple of months. But if we see numbers comparable to what we've seen at the beginning of the summer, I think it'll be, in my view, definitely satisfying the conditions for making that substantial further progress.
So it sounds like you're one employment report away from thinking about time to announce a taper. I assume that's correct. Talk about how much time you think the Fed ought to take to wind down those $120 billion of asset purchases.
Well, once we've made the progress, and I think we're very close, and I'm hopeful that will happen soon, my view would be let's start the taper and let's do it quickly. Let's not have this linger. The last time we did the taper, the economy was in a much weaker position than it is right now. And because of that, there was some uncertainty that the taper itself could trigger some weakness, further weakness in the economy. I just don't think we're in that position now. And given that, I think that trying to get this done as quickly as possible will be the best approach, and I'm not really expecting it to upset markets in any significant way.
Raphael, when last we spoke, which was back in May, you were puzzling over this idea. Was the inflation you were seeing transitory, or was it more permanent or structural? I'm wondering if you've come to any conclusions on that.
Well, there are two things I would say on this. So first, I do think that there is still a lot of episodic aspect to the inflation that we're seeing today. But when I talk to business leaders, the one thing they've all told me is that this episode is going to last longer than people expected, and that this isn't just going to be a 3-month or a 6-month experience, but it's more likely to go well into 2022 or even perhaps beyond. And so for me, that says we have to look very closely at whether that longer-term episode, is going to trigger changes in people's expectations and how businesses and families approach the economy. That's what I'm going to be looking at over the next several months to get a sense of what this really means in terms of the trajectory of our policy. I'm hopeful that expectations will not change substantially and move away from the 2% level that it is in the long run. But if it does, then we'll have to factor that into our policy prescriptions.
Hawkish ideas about tapering or combating inflation have generally been associated with sort of a leaning towards capital. But your tenure, you focused a lot on low-income Americans and their situation, on African Americans and their situation. Talk about your sense of how high inflation, whether or not that's an issue that really is one that affects low and moderate income Americans more so than wealthy Americans.
Well, we know that high levels of inflation mean that as time passes, the little bit of money or the relatively small amounts of money that lower income people have are not going to go as far. They're going to put more stress and more pressure on families and cause them to have to make hard choices and really choices away from making long-term investments that can change their trajectory and their prospects. So we don't want, and we really can't afford to have inflation that is too high, because people at the lower end of the spectrum are going to be hurt pretty significantly. I think that's one of the reasons why we are looking very carefully at inflation. We in Atlanta, we have a number of series trying to understand what's happening in the inflation space and surveys. And we want to make sure we're on this, because high inflation or anything close to runaway inflation is really going to hurt people at the bottom of the ladder. So I do worry about that a lot. and it's something that I continue to talk with my staff about as we think about the best course for policy.
Shepard Smith here. Thanks for watching CNBC on YouTube.